As of Friday, May 8, 2026, the market closed with Intel Corporation trading at a live price of $124.90, marking a massive intraday surge of $15.28 or 13.96% during the final session of the week. This movement is not just a standard price fluctuation, it is a fundamental shift in how the street perceives a company that many had written off as a relic of a previous tech cycle. While most retail investors were busy tracking the daily swings of Nvidia stock or checking their Robinhood stock trading accounts for the latest meme momentum, Intel quietly executed a breakout that has completely reset its valuation floor. The expectation was that Intel would continue to struggle with its Foundry transition and lose further ground to competitors like AMD and TSM. The reality, however, is that Intel has reached a tipping point where its advanced packaging and high-volume manufacturing capabilities are finally being recognized as the backbone of the next phase of infrastructure. This disconnect between the laggard narrative and the leader execution is creating a curiosity loop that professional traders are currently exploiting while the general public is still catching up to the news. When you look at the recent stock movement, the sheer volume tells the real story. Over 227 million shares changed hands in the last session alone, which is nearly double the average trading volume. This level of activity usually indicates massive institutional accumulation rather than simple retail hype. Major players who manage Schwab Intelligent Portfolios or massive Fidelity mutual funds are clearly repositioning. The catalyst was a combination of a massive Q1 earnings beat and the confirmation that Intel's 18A process node is achieving yields that were previously thought to be years away. Investors who use investing sites for basic data might see a GAAP net loss and panic, but the smart money is looking at the 22% year-over-year growth in the data center and AI segment. This is where the tension between expectation and reality becomes most profitable. The market expected Intel to be a victim of the AI shift, but reality shows that the CPU is becoming the essential orchestrator for AI workloads, and Intel is the primary beneficiary of this trend. For those who engage in self-investing or use an individual brokerage, the technical setup here is fascinating. We are seeing a stock that has surpassed its dot-com peak for the first time in over 25 years. This is a psychological barrier that, once broken, often leads to a new era of price discovery. If you are looking for investment help through platforms like SoFi Invest or Interactive Brokers, you will notice that the implied volatility has spiked to the 100th percentile. This means the market is pricing in a massive move, and the options chain is leaning heavily toward the call side. Institutional ownership has climbed to over 64%, with heavyweights like Vanguard and BlackRock adding to their positions. They aren't just buying a chip maker, they are buying a foundry that is about to become the only viable Western alternative to Asian manufacturing. Comment below how many shares of Intel stock you currently hold, or if you think the US government's support for domestic chip production will be enough to keep this momentum going. Let's talk about the business model, because this is where the long-term authority is built. Intel isn't just selling processors anymore, it is building a foundry service that aims to manufacture chips for its own biggest rivals. The logic is simple. The world has an insatiable need for silicon, and there are only a handful of places on Earth that can make it at scale. By splitting its business into Intel Products and Intel Foundry, the company has allowed for a more transparent look at its margins. While the Foundry side is currently operating at a loss due to the massive capital expenditures required to build terafabs, the product side is printing cash. This is a classic Amazon Web Services style play, where a massive internal cost center is turned into a high-margin external service. When you use a Fidelity trading platform or the Robinhood app to look at the financials, don't just focus on the bottom line. Look at the capital allocation. Intel is spending billions now so that it can own the means of production for the next decade. The integration of AI-driven automation into their manufacturing process, specifically the EMIB advanced packaging, has reached a 90% yield. This was the specific reality that crushed the expectations of the bears, who thought Intel would never catch up to TSM's packaging prowess. For an investor doing online investing through SoFi or checking their Interactive Brokers fees, the takeaway should be that Intel has successfully defended its moat in the data center while opening a second front in the foundry market. The recent partnership with Apple to manufacture custom silicon is the ultimate validation. If the most demanding hardware company in the world is willing to trust Intel with its blueprints, the struggling narrative is officially dead. This is why we see such a violent re-rating of the stock price. It is the market's way of admitting it was wrong about the company's trajectory. Looking at the sector momentum, we are seeing a rising tide effect, but Intel is currently outperforming the Philex Semiconductor Index.
While Nvidia stock remains the darling of the GPU world, Intel is proving that the CPU is the brain that tells the GPU what to do. As AI models become more complex, the bottleneck is often the communication between processors, and Intel's architecture is designed specifically to solve this. Macroeconomic pressures like high interest rates have actually helped Intel by forcing competitors to scale back their own expansion plans, while Intel has secured government subsidies through the CHIPS Act that act as a massive hedge against market volatility. If you use Fidelity IRAs or a SoFi robo-advisor, you are likely seeing an increased weighting in the semiconductor space, and Intel is now a core component of that defensive growth strategy. The future outlook for Intel is tied to its ability to maintain this execution streak. We have seen 6 consecutive quarters of exceeding expectations, which has built a level of management credibility that hasn't existed at the company in a decade. The upcoming Panther Lake and Clearwater Forest architectures are expected to further solidify their lead in power efficiency, which is the #1 concern for hyperscale data center operators. The risk, of course, is that a global economic slowdown could dampen enterprise spending, but the shift toward AI infrastructure appears to be a secular trend that is somewhat insulated from short-term cycles. For those using an Interactive Brokers account for active trading, the key levels to watch are the previous resistance at $118, which has now turned into a primary support zone. The contrast between the public's perception and the actual data is where the most significant opportunities lie. While the average person might still think of Intel as the Intel Inside sticker on an old laptop, the reality is a global foundry powerhouse that is fundamentally integrated into the world's most critical supply chains. Every time you use a Fidelity mobile app or engage in Robinhood crypto trading, you are interacting with a digital world that is increasingly powered by the very silicon Intel is learning to manufacture more efficiently than almost anyone else. The authority Intel is reclaiming isn't just about speed or power, it is about the sovereignty of the supply chain. In summary, the transition from a legacy hardware provider to a modern foundry and AI infrastructure leader is the central insight that the market is currently pricing in. The expectations were low, the skepticism was high, and the reality of their technical breakthroughs has forced a massive short squeeze and institutional rebalancing. We started the day at a price that reflected doubt, and ended at a price that reflects a new baseline for growth. Intel is no longer a turnaround story, it is an execution story. Whether you are using intelligent portfolio tools for long-term wealth management or flipping shares on a Robinhood stock trading account, the data suggests that the floor has been raised significantly. The tension between what the world thought Intel was and what it has actually become has been resolved in favor of the bulls, and that authority is likely to persist through the next several earnings cycles. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.